Okay, good morning, everybody. This is August the 7th. We're going to do a market update, what's going on in the market this morning. So I'm just trying to get back to my normal routine here. So still a little bit tired, but anyway, I decided I think it's important that we do the market update. It's important we understand what direction the market is going, the overall market. Everybody knows where the stocks themselves are going, but what about the market itself? How is it getting stressed out? Is the market, what's going on with the market? So it's very important to understand, are we going to continue to the upside, or are we going to take a maybe to the sideway trip here? So let's start with the ES this morning. A lot of it news has a effect that even though we had the tariff effect take effect from Donald Trump, the market has been pushing to the higher side, and a lot has to do with a 95% chance that they might even cut interest rates by a half a point in September. Look at the job reports. I wasn't here the last Friday. The jobs report came in really as a terrible number, and I put it. Let's go just show you guys what we were looking at on the Forex Factory, what I mean by the jobs report. So we saw the today's Thursday. Let's go back to last Friday. So this our average of our earnings were up. This is still an inflationary number. This was high, even though they matched the point 0.3. That means the wages are still increasing, and if the wages are increasing, that's inflationary. But the turbo number is where this one is a non-farm payroll, and it keeps going down. And it was 73K. It's supposed to come at 106K, but still a lot lower than the 106. But even if it come at 106, it still would have been a bad number. Okay, still would have been a bad number. Unemployment rate is sitting still at 4.2%. Right now what's happening is, overall, what they're saying, why isn't the interest rates going up when people are losing jobs? Well, people are not losing jobs. There is less jobs are out there. That's the problem. There are less. The jobs keep the data keeps going down. So let me show you here on the chart. So if you look at these bars, these histograms, see how what the trend is. It's going to the downside. There are less jobs are out there. Okay, and when there's less jobs out there, that means your economy is going to the downside. And a lot has to do, if you look back in April, see this was a month, that was the last month when Donald Trump actually affected those tariffs. And since those tariffs, the job data has been just going to the downside. It didn't pick up, it's going to the downside. That means overall economy in the US is really kind of going to the downside. And that's what Donald Trump is are after Jerome Powell, to cut interest rates so they can improve on that. And one side he's putting these taxes on the other side he wants interest rate cuts. So this hasn't happened historically before. So where is that going to take the market overall, the US market? That's going to be very interesting in the next couple of months, because now we actually have tariffs on countries, and that came in on August the 1st. We're not going to see it this month when the numbers come out. We are going to see in the numbers in September. Okay, September numbers are going to be, I think, going to be real bad, and that will show the U.S. economy has really sunk to the lower side. But what's our job? Our job is to know that, and when we know that, what are we supposed to be doing? What should we do with the stocks? I think going into, as we are going forward into August or into September, we should, I think, start taking a lot of start taking profits out. But I'm not in the interest rate sensitive stocks, the one we know they're going to lower the interest rates. Those stocks are going to have a good effect. They might go to the upside, like the real estate. Anything that's affected by interest rate cuts are going to have a good to the upside. Those are the ones we should still hang on. So the other ones are going to get negatively affected, like the technology is going to get affected negatively. overall, and that is going to hurt the overall market. So these numbers are, I think these numbers for the last month, and then when we get the numbers next month, they're going to be for this month. And let's see how bad they are. But I think they're about to get worse than this now, these numbers. And if these numbers are going to get worse, what's going to happen with the overall, what's going to happen with the stock market? So we got to be able to predict. Like I said, we got to be able to predict where the market is going before it happens. So to protect our profits, to protect our portfolios. Okay. So we need to do that. And I think I'm going to look at more and more closely at these numbers when they come out and what their numbers look like. We need to, like again, I will be doing a lot more work on these microeconomic numbers, and maybe even possibly hold a class on the weekend to make you guys, anybody that's new, to understand what these numbers are. So we got a 8:30. We got another number coming out today. That is a jobs number that comes out weekly. Those are the number of people that are file for benefits. So the number is coming out in about 7 minutes. It's 221K, and this is the number of individuals who file for unemployment insurance for the first time. If that number goes up, that means that you're not doing well. Okay, if that number comes below, that would not be too bad. But again, I think this number should start going up more, and we should even see it next month. That we will see most likely more and more people start applying for unemployment. So it's really important to watch these numbers and what these overall numbers are saying. And these numbers been basically going to the downside. If you look at it, let me go a little bit down here, and I want to go back to this is when basically I want to go April, and it started. This is when the tariffs started coming in, and it takes 3 months down the road for anything to get affected. But since then, these numbers have been just going to the downhill. So overall, these are weekly numbers. They change like every week basically, and I'm looking for these numbers to go lower, and they've been lower in the last almost 6-7 weeks, and they've been steadily going to the downside, and I think they're about to get worse. So these are all indicators to us how we should be trading in the market. It's not we shouldn't because overall health, when you get sick, you get flu, it affects your entire body, right? It's the same thing with this. This affects the entire stock market. Even though you may see certain stocks like come out with good earnings. CELH has come out with good earnings this morning. But eventually, if the market does take a dip to the other side, it doesn't matter. It will take those kind of stocks down with it. Okay? And those are the type of stocks you want to buy when they go down to the downside. Okay? So we got about 5 minutes to come out. We're looking at, let's take a look at the ES. ES is, I was watching this point here to see if this would break out. This one here broke out this morning to above this level here, and next level we're looking for ES to break above the all-time high 64.68. This was very important. If it doesn't break this here, this is the key factor that I'm really looking at. Is this could for example, this is a higher high, and then we got a lower low. Now we need this to break this into higher high. If it doesn't break higher high, that's another sign that the market may be giving up back to the downside. So if this market doesn't get to the all-time high and higher and keeps going to the sideways and then starts dipping, it's time to short the market. Okay, then it's time to really short the market. It's really time to take some profits out. So right now it's giving us a good time, just relaxing a little bit, that we can take our profits out easily. But when this market reverses to the downside, and if it does, and it builds a little bit higher high, then starts going to the downside, then we can have this market can quickly dip, because when market always goes up slowly, but the market, see how this 4 or 5 candles, it dips down pretty quick. And when the market is coming down, you're going to get longer candles like this. Okay, definitely get longer. So right now, this is a nice board on 62.40 on the ES. Will it break below that? If it breaks below that, then seriously there's something wrong with the market. And that's where we really should be short on the market. But I'm looking up here to see what kind of candles we'll get over the next couple of days. Are they bearish candles? What kind of candles we getting? So we got a spinning top here right now. That doesn't, they're basically saying the market doesn't want to go up, it doesn't want to go down. So, and these basically, there's another spinning top and a whole bunch of spinning tops starting to develop here. And let's see what happens over the next couple of days on the market. Don't get faked out by these candles to the upside right now. Keep a close eye on it. I don't see a lot of volume. There was a lot of selling on these two candles here, but we're gonna see if the volume. Let's see if the volume picks up on these here. Okay, if there's more volume on this and this doesn't go to the upside, that's another warning sign that the market may be overpriced, may go to the downside. Okay, so let's take a look at the Nasdaq as well. And what is the Nasdaq telling us? Basically the same thing. Higher high and see if we get a lot of volumes here in this area, and if it doesn't break the all-time high, then we could see also bearish on the Nasdaq. Nasdaq has been very strong because of AI and the chips going to the upside, but let's see how far this thing can it take to the upside. And Donald Trump again, if you heard the news last night, he's putting 100% tariff on any chips made outside of the US. So anything that comes out of Taiwan or any other country that makes the chips, they're 100% tax. And he wants all these chips to be made in the US. So a lot of people would say, well, TSM is going to get hurt on this. I don't think so. TSM is building a big plant in Arizona, and it's a multi-billion-dollar plant that they're building down there. So they're gonna start producing a lot of those chips in the U.S. So Taiwan Semiconductor (TSM) should be all right. If anybody that holds them on temporarily, they will have a little bit of negative side effect, but eventually will go up. He also called for Intel CEO to resign this morning. Again, Donald Trump, doing his own verbal things that he likes doing. But again, he's not. This CEO was just. I think he's been on the job for less than a year. Really hasn't done much, and Intel stock hasn't really gone anywhere either. So nothing but to the downside. So the Intel stock is down on his words that they should get rid of that CEO. Okay, take a look at quickly the other things that affect the market. Take a look at oil. Oil has been coming down. The reason the oil has been coming down recently because these tariffs are having a negative effect on the U.S. economy. And if I just showed you the jobs number, if this is going to continue to the downside, is because they're not using much oil in the U.S. And that's why right now it's to the downside. It has a very solid support at 62.45. If it breaks 62.45, we can see $55. But I don't see it right now breaking this level. So when you guys, if you're trading anybody oil, which I haven't even, I haven't traded oil since back here, just before this year. And since then, I said this thing is going sideways. We have been going to a sideways. Basically, it's a $5 range between 70 and 65. Oil is definitely a short below this golden line to the downside. But I think it should stick around. It should bounce off here back to the upside. That would be a good trade off oil if anybody's trading it. What about gold? Gold is what gold is seeing right now. It's going higher. You know why it's going higher? Because we're going to get inflation in the U.S. Why are we going to get inflation? Because of tariffs. Okay, so gold is an hedge. That's why gold has been moving to the upside, because as the economy in the U.S. is going down because of the tariffs are going to create inflation. And what is gold going to do? Gold is going to go to the upside. Okay, and gold had a very strong support around the 3,200. I thought would get all the way to down here. There would be a nice buy, but it never actually ended up this lower. So I do think this thing can continue to the upside. Another good trend line is this one here. You can draw another trend line right up here almost. Okay, that would be really a nice breakout on gold to the upside. But I think if you have gold, you should hang on to it. I think that there's a strong support here, okay, and it's a pretty strong support here on this trend line. So it could bounce off this trend line to the upside, and it will be really nice if it breaks up to the upside from here. I think gold will hold steady, okay. Now let's take a look at the 10-year. The 10-year, what is 10-year doing? The 10-year is going to the downside. Why is it going to the downside? There's now 95% chance that they're going to cut by at least a quarter point. And there is almost 45% they might do a half. Okay. So 95% definitely a quarter point, 45% definitely in September. They are also having a Jackson Hole meeting at the end of this month. I think it's the last week. And this is where a lot of economic people around the world come to, just like Davos in Switzerland. This is the same thing in Jackson Hole, and a lot of news will be coming out of that. What are they going to do with interest rate? I'm sure Besant is going to be there. All these, trading partners are going to be there. Usually the heads, the CFOs, the CEOs, and also country, what do you call them? Finance ministers are always there. So it should come out a lot. It should be very interesting. I wouldn't be surprised if Donald Trump shows up there. Okay, so a lot of people, business people, usually go to Jackson Hole. That's coming out. I don't really have an exact date in front of me. I will post it in the chat. So that's coming out at the end of this month, pretty much the last week. So this, what is the 10-year doing? Like I said, it's I think it's going to come down further. And I'm still holding on to those bonds. My bonds are positive right now. They are making money. Plus, I also got 4% dividends on them. So if you guys still got those bonds, don't sell them yet. Okay, you're gonna get more capital gains out of those. So I think this should come down to the $4 range, and I should get a nice return on those. That was a safe. Even still, could you still take advantage of it? Yeah, I think you still can. So I'll show you the 4 bonds that I own. I own actually 3 out of the 4, but these are the 4s that I follow. If anybody wants to take a note here, let me just show you those. Bonds right there. These are the 4 I follow. Okay, and the only one I don't have, I think it's VAGLT. I have all the other three bonds, and they all pay. This one here pays about. Let me just quickly show you how much. No, not season. I want to go in here. It pays about 3.74%. I've been holding them now for the last 4 to 6 months. Yeah. 4 to 6 months I've been holding on to these bonds, and I'm not selling them till I get the 10-year go below 4%. So I think these are still buys. I think they'll go to the upside more. What's my target on this one? My target is up here, $97. Okay, on these bond. This one here. Go on the SPTL. I think the target is up here around $28 on these bonds. And same thing with SCHW. This one is, a lot of people own this one. Again, it's trying to, once it breaks out above here, 31.97, I think we're gonna see around the $34 range. Okay, so these bonds, again, why these bonds? Again, they're safe. They were at the time, they were safe bet. I'm gonna go back to my watch list here. And when you go back, look at the 10-year, they're opposite. If the yield is going up, those bonds are going up. The yield's going down, the bonds are going up. Okay, so and I see this level coming down to 4%, somewhere below that by September when the interest rate cut. So that is what the dollar index doing. Dollar index is heading to the downside.
Numbers.
Sorry.
Numbers
Oh yes.
number.
Thank you. Let's see the numbers here. They came at a little bit. Here it is, a little bit stronger, 226K. Okay, that means there are now more people applying for unemployment. That is also showing more weakness in the U.S. economy. Okay, so more signs that the U.S. economy is getting weak. If the U.S. economy is getting weak, cut interest rates. So I'm pretty sure Donald Trump will make comments off this one. These are weekly numbers, but again, Donald Trump will take anything to stab at Jerome Powell. Okay. So these are, again, are they good news for the market? Yeah, for interest rate cuts, right? So the market should have maybe moved a little bit to the upside. Let's see what it did. And let's break it down to the minute. Yeah, see, you see that little movement to the upside? Yeah. Could it continue to the upside? Yeah, sure. Again, overall, it's bad news for the economy, but it's good news for interest rate cuts. And what do you think this is going to long-term effect you're going to have on when you have these kind of numbers? What kind of the long-term effect you're going to have on the market? Short term, yeah, the market's going to go up. If you are losing jobs in the economy, what's the long-term effect on the stock market? It should go down, right? So that's why I'm saying the future, look on the road where the jobs, where the economy is going. Short term news comes out like CELH came out news this morning, right? Earnings, the stock is up. But what is the long term effect of those earnings? What are they saying about the next quarter? Okay, that's old news now. That's old news. What kind of effects it's going to have? That's what you need to know on this on the futures here. Okay, the long term effect. So that's what we're trying to predict in the market, and that is very important. So let's take a look at we looked at the dollar index. Let's take a look at the put call ratios. Okay, put call ratios are heading towards the put side on the SPY. Okay, and also a little bit on the triple Qs. Okay, on the Russell 2000, it's going to the call side a little bit. Still negative to the put side, but they strongly went towards the call side. But overall, with what this is telling me is people are starting to buy more puts. Okay, remember we talked about the market. Yes, we need to get to the the higher levels, right? So if you go back to the daily, right? So what people are doubting, a lot of them starting to doubt. You will see these numbers. We'll see them every day. If people will start doubting, if you're going more and more to the put side, that this is not going to go to the new highs. Okay. So today it's right now they're showing more and more. They're not strongly towards the put side yet, but they are moving towards the put side. Okay. And what is the Bitcoin doing to the Bitcoin is hanging around this level here. If we could get interest rate cuts, Bitcoin is going to go higher. Again, Donald Trump are now putting in the 401k, and this is going to spur buying in the Bitcoin on the short term. So this is already moving a little bit to the upside. We break it down to the hourly. This is basically what Donald Trump has done since this was news yesterday, a couple of days ago that came out that Donald Trump said, hey, they're putting it, and ever since it's been moving up slowly a little bit. And Bitcoin may head back to the 120 area. Okay, same thing with the Ethereum. Ethereum has been very strong to the upside. All of them are moving to the upside. Okay, let's take a look at quickly. I want to look at the pound. The reason I'm looking at the pound is I talked about it a little bit this morning. It's headed to the upside. They cut interest rates by a quarter point. And they knew this was going to be a quarter point cut, and they actually drove the pound to the downside. So what happened when actually they cut interest rates? When they cut interest rate, the pound should have got weak, right? Right? The pound should have got weak, but the dollar is also getting weak on the other side because they're going to cut interest rates there too. So eventually, what happens is when people are looking for a short, it went to the other side, to the upside. And that has confused a lot of people saying they're cutting interest rate, but the pound is getting stronger. Okay, but what is it? Who is it up against? This against up against the American dollar, right? American dollar, they're also cutting interest rates. And when they're cutting interest rates, and the pound is in UK they're cutting interest rates. It's overall the stronger the stronger economy is going to win. And they've been cutting interest rates now for last little while. They didn't cut the last couple of times, but they did cut interest rates before with the European Union, right? So that's why this pound has been coming down a little bit. Now I think this is going to hit 140 eventually in the next year. I would say in the next year it will be $1. It went up here. Remember we were predicting when back down here that going towards the upside, but Short-term rate is down, but it's going to hit to the 140. Same thing with the euro. Euro will be 120. It will be back to this highs because the American dollar is going to get weaker, especially when they start cutting interest rates in September. And this will, I think it's still a good time to buy the euro against the American to the higher side. Okay, that is pretty much the currencies. Let's go back to the stocks. So one of the stocks that I've been really I've been buying more and more is the stocks that have been, especially these housing stocks, the YR housing stocks, DHI, and because interest rate cuts. So let me go to the day chart. So remember this little bounce up here, then the market went to the downside. Now it's back going to the upside, breaking to an. I see this thing here going back to the all-time highs. And if you get like a half a point cut in September, this thing will be back to 170, 175. It should maybe get, this is my target right now, around the 180 on DHI. I'm still hanging on to these stocks. Like I said, I didn't hang on. I remember this lower dip here when I said it's an opportunity to buy. Then there's another dip here, opportunity to buy. It's going higher high, lower low, higher high, a little bit lower, higher high. Then you probably see a little bit lower, then go back up again. So the same thing with PHM. Look at these, exactly the same type of charts. So if you're looking still to buy these stocks, I think these are still buy. Okay, PHM is still buy. If it breaks above 122, if you're looking for a breakout right there, 122, 123, it's a buy. Okay. Okay, Archer Daniels has also been going nicely to the upside. So I don't know if anybody's accumulated down here a whole bunch of Archer Daniels at 45, 48. I bought a whole bunch of different levels. My average is around under 52, pretty much on this one here now. And I'm thinking about taking a lot of profit because problem is when the stock is good down here and you can accumulate a lot. Now I think it's time to take some profit. A lot of people just buy one time and they just hang on to it. But me, if the stock is good and keeps going to the downside, I'm going to accumulate. I add more. Okay, that's the way I trade. That's the way I do the balance sheet. Unless the balance sheet changes or something that changes inside the company, that's the only time I will sell or not buy the stock. But if there's nothing that has changed, I know eventually it's going to go back to the upside. So I accumulate. The accumulating means problem is you end up holding a lot of stock, right? Again, when it starts first bouncing, then you start selling it some. So this was one of them that all three stocks are pretty much, if you are Archer Daniels, if you want to take profit, if you have good profit, you've been buying here, not going to blame you for it. Okay. Because why? Because overall market. If the overall market does turn back to the downside, Archer Daniels will also turn back to the downside, but that will be another opportunity to buy this stock again, right? If the market drops whole because of tariffs, of the job situation, that doesn't mean this stock has been now getting bad. It's just going down with the market. That's when you want to buy stocks like this. Okay. So I definitely I'll keep a close eye on it. I'm definitely gonna grab some profit out of this because I do own a lot, right? So what about Pepsi? A lot of people have been asking me Pepsi over messaging me for a while, and what I'm looking is higher high. So higher high, lower low, higher high, lower low. I expect Pepsi to go higher. Pepsi is sitting at 140.80. This is going to be a nice breakout to the upside if it gets above 147. I think it can. I think the target is still 180 on this Pepsi by December, because we are getting into now the fall, and then we're going to get into the Christmas season. I think we're going to see Pepsi a lot higher than here. I think Pepsi is still, if somebody's looking for it, if you want to put a stop loss 137.77, if you want to buy it at the current price. Okay, at the current price, I think it goes higher. Archer Daniels. CNR. CNR is I've been when I went to the West Coast, there is a lot of people who work for CNR. It's the Canadian National Railway, and mechanics and inside union people. I because I also know I was in the railway as well. I was in the Toronto subway, but I'm very familiar with the CNR people. So I was talking to them. Basically, sometimes if you want good information on a company, is go talk to their employees, right? Employees will give you a lot of information. So I've been talking to them, and they have basically a lot of them. I said, "How's your shipments to the U.S.?" The shipments are down by 30%. Okay, and that is not figured into the price yet. And maybe it is because that's why the stock has come down a lot. Okay, I see short term this thing could go even a little bit more lower on CNR, but I'm not selling. Eventually, it will. I will accumulate more. Okay, this next quarter here is about November. This could be one of their bad quarters here. Okay, according to talking to them, 30%. That across the border is down right now. 30% is a lot. And the only thing that's really been pumping between the U.S. between Canada and the U.S. They basically were saying they were exporting a lot of oil still. They're taking a lot of oil in the U.S. because they don't want Donald Trump doesn't want higher oil prices. If you saw it, he hasn't put a lot of tariffs on the natural gas on the oil. So I think it's only 15%. He did not raise that. If he raises that, then we could have a drop on the Canadian oil as well to the U.S. But right now, the only thing that's saving a lot of it is oil going to the U.S. on the CNR. Okay, and also agriculture. We have NTR, potassium, that's going across the U.S. That's already dropped off by 50% to the U.S. The U.S. farmers are having a very rough time right now, and that's what a lot of these guys are going back and forth to U.S. That's the other, potassium is not going into the U.S. It's going to the other countries, but it's not going into the U.S. U.S. farmers are getting worse in shape out there, and that may turn. It hasn't shown up anywhere yet, but they're saying they're getting a bad situation in the U.S. All the soybeans that the China used to buy from the U.S., it's all being bought from Brazil right now. Right now, we I don't know, but like I just got this feeling out of these guys talking to them because they're always traveling back and on the CNR back and forth to the U.S. So really good information out of them. But I think this CNR, I think if anybody's waiting to buy this, I think maybe want to hold off a little bit. I'm not sad. Remember, I sold a lot of it back up here. I bought some a little more of CNR back here. I'm gonna buy more of it, but I'm gonna hold off a little bit till a little bit comes down a little more maybe, or even if I buy it back here or to the upside, that's fine too. But CNR still the dividend is kind of still safe with them, so you still get the dividend, but the next earnings here, I don't know about that how good they're gonna be, but especially with the 30% drop off on the goods going back and forth. So real good information. CNR, NTR, it's the same thing. I think this is going to come down a little more because we got 50% drop off into the U.S. This is going to hurt. Okay, this earnings here came already from the past. Okay, and 490 million they have missed by revenue. This could be further miss on the next quarter. Okay, so maybe if you got NTR, you have a good profit. I'm not gonna tell you. It's up to you if you want to take it, right? But the way the talk is from these guys that this thing could come down maybe to around to the $70 range again. Okay, then maybe buy from there. Still, this is the most important commodity. Still gonna need to grow the food everywhere in the world. They're still gonna need this, but short term, these that are like CNR, NTR, could have both of them could have a negative effect on their stock prices. Okay, so just be aware of that good information. Canadian banks our earnings are coming out at the end of this month, last week. So I still think TD is a short term. We just want short term is still a buy. I think it will break this high 102.88 to the upside. I think short term is still good till these earnings. After that earnings or the market starts turning to the downside, this will also take to the downside as well. But again, short term, I'm holding on to it very tight. But I'm looking somewhere. If something turns negative on the market, I will dump entire TD Bank that I have bought back around the $75 range. Okay, so definitely hang on to that. Anybody have any Pacific stocks they wanna talk? R is also Shashant. It's a real estate as well. So uh, so if you can, but I think it's still a good stock. It's a little bit up right now. I think the earnings will turn around back to the upside. I think it's a hold currently, and it will turn around to the upside 74.52. Okay, yeah, and I think they paid a pretty good dividend as well. Yeah, 7%. So they're into real estate leases and space. So I think they'll be fine. But short term, again, I think it's interest rate cut that will drive these stocks to the higher high. Uh, CNQ earnings. Let's take a look at. Again, CNQ should be fine. Why? Because remember, that's the only thing that these CNR people told me. Still a strong take oil into the US, even though a little bit of miss on the revenue here, strong earnings per share. That should still make this stock solid on the dividend. So, should you buy it? Yeah, I think so. I think you can buy this here still, CNQ, especially if it breaks above 44, 44, 35 there. That could be a nice point to the buy side. Okay, I think it pays a pretty good dividend as well. 5.45. I would definitely, I'm holding on to it. 15%, like I said, tax. Unless Donald Trump comes up and puts more tax on that, then it could be a drop. But I think it's a solid stock. Continue to hold, or if you even want to buy. Okay. CNQ, Elf Beauty. I'm gonna quickly go through this stuff here. Elf Beauty again. It's a watch this support level here, 105.43. Okay, if you got good profits from down here, watch this break level right now. It is showing actually pre-market $99. So what did they do? Did earnings? So earnings came out, and they must have guidance. Let me quickly take a look. What did they do with the guidance? Why the stock? The earnings are good. We knew the earnings were gonna be good, but why is the stock down? Margin outlook. That's the problem. Profit margins are a little bit down. That's why the stock is down. But I think it'll be an opportunity, really, to be honest with you, if it comes to the lower side here. Probably to buy down here. Could give us a second chance to buy, but not right now. I wouldn't be a buyer right now. Okay, but wait. SPHR, Sphere Entertainment. Okay, sideways chart. Again, new IPO a couple of years ago. Need this has got a really a trend here. You can actually draw a line, see if it breaks this to the upside. That would be this is what I would be looking for. Okay, I would be looking for this breakout to the upside, and let's see fundamentally what this is doing. 1.5, pretty small company, negative earnings, revenue, all over the place. Okay, negative earnings. Yeah, the only place I would look for if I any sort of buy on this stock if it breaks above here. Otherwise, I'd stay away from it. Negative earnings, negative stuff. Again, right here is the breakout. Take a look at GIS. GIS, I would definitely buy. They're going through a phase where they're spending a lot of money on the plants to get rid of the coloring. So I think this could be a nice board. Let's see if it breaks. If it doesn't break 48, I think it would. Let's see how far can it go sideways. If it breaks 48, then I would hang on to buy. Then if it gets to the $45 range, then I would really start buying this thing. Okay, but just hang on. Let's see what it does around here. 48. It's a very good stock. If you have it already, hang on to it. I'm hanging on to mine. Okay, definitely hanging on. My average is I think around 54, 55, somewhere there. Okay. VIRT.
भाजी Walmart भी breakout होया कल.
Yeah, Walmart, it did. It pumped up to the upside. Yeah. Yeah, but watch for 105.28. All-time high. This is all-time high for Walmart. Okay. Yeah, Walmart had some news. Let me see what it was. WMT. It basically, Walmart has a lot of McDonald's in it, right? And McDonald's had good earnings. And McDonald's is pumping a little bit to the upside. So basically, it's pumping on McDonald's right now, Walmart. So that's the reason it's going up. VIR, let me quickly go VIRT. 42. Yeah, the chart looks really good. What about what does the stock do? Virtual Financial. Their liquidity survey to break through. Okay, then the options market. They're basically a financial company. 6.49 billion, 2.26% dividend. Statistics, very cheap, very cheap. Revenue, that's 2.7. It's not bad. 1 to 3. I like that sales ratio 1.25. Earnings are going to the upside. Yeah, that's why the chart looks good, because fundamentally strong, technically is good. Yeah, I would, if you have it, hang on to it. If you're looking to buy it, yeah, or you can look at it a breakout, or you can even buy it here. The stock really looks good. Okay. Let's take a look at WBA. Okay. Wow. 1183 Walgreens. This is a pharmaceutical. Ever since Amazon took over a lot of the prescription drugs, these stocks been getting killed. So again, should you buy this one? This could be bottom out. Maybe it may be getting. We should do maybe analysis on the Walgreens. It has been really been beaten up. It's been trying to recover to the upside. So maybe this is a point where it can maybe be a turnaround story, because it's holding on to revenue pretty good. Okay, pretty good revenue, and the company is still positive earnings. It really looks cheap to me. It really is. Even the dividend's good. So company is really cheap. I think if you want to buy this one right now, you probably could. But again, stop loss somewhere around back here, 933. You got to let it play a little bit. I think this could be a nice recovery back to the upside. Well, I have to take a look at the balance sheet a little more. I think this could be one of the good ones. Okay, guys, it's almost 9 o'clock, guys. I need to go. I will be back as soon as the show is over, and we'll be talking more about stocks back in 30 minutes plus. Thank you.
All right, what's up? Good morning, guys. Hope everyone is doing well. Thursday morning, ready for markets. Feeling a lot better than yesterday, so just pretty much slept it all off, and doing still a bit under the weather, but doing